Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So we came in today, everyone was all excited, the big Apple news, 9 o'clock conference, and we talked a little strategy. We said, let's watch Apple for the market, let's watch Apple for a little direction, a few different scenarios. They come out with a one-time dividend, perhaps that would probably be the most sellable event. But if they come out with a quarterly dividend or a dividend that yields anywhere from 2 to 3% with a buyback, it might be difficult for them just to sell it off. So you didn't know. What you had to do is you had to watch the action. You had to watch the first 30 to 60 minutes, which is what we tweeted about. And there were some cute trades, both short and long. But really, once the morning developed, you saw that the real 60-minute wedge was broken to the upside. And if there was just a lot of different trades, and a lot of people were also trying to call a top in it and put their name out there on it. The bottom line is stock is strong. Stock definitely is still cheap. It's a little bit extended. It's not the easiest thing to trade, so you have to really pick and choose your spots. There were definitely a lot of other areas that were a little easier to trade, better setups, not as crowded or not as easily to be overtraded. So at this particular point, the market has longs and shorts in it. You don't have to be all long. You don't have to be all short. You could pick spots and you could sell extended periods. You could, tier in, tier out. You could do a lot of things without having to say, oh, I see a short on top. Oh, we got to sell now. Oh, here comes the pull in. Oh, whatever it is, it's getting a little ridiculous. And I'm sick of hearing about it from everywhere, even from my own associated members and traders. The bottom line is until the action changes and you have a real composure change, just stay with it. Even today, I shorted some FAS. I just kind of felt that it was ready to pull in. It was like 112. I'll show you the trade. And I bought the FAS around 2035. And that trade worked for a cute short. And guys like, so Red Dog, you calling the top? You think it's it? We're going back down to 1340 on the S&P? I'm like, no. We were just up 5 days in a row. We just had a divergence in Bank of America after going from 820 to almost 10 bucks. Sell some longs, and if you think you can handle a cute short, do it. Because we also said that on Friday, I think, is when people started the early short in the financials. So they got squeezed Friday, stayed with it, and I think they kind of capitulated this morning. So that's when I said, you know what, the risk reward makes sense. So let's take a real quickly the chart of the S&P. This trend is still strong. Here's the macro trend. Here's your low, higher low, not even close to being tested. Here's your momentum trend. We had that one little pullback, which wasn't much. It held the 1340, took it back quick. Here's where we had to switch gears and get back long. And here we are just trending higher. Now we're coming into another area. I guess you got to look at the monthly chart because that's where it came from, or even the weekly chart. And it's a little bit of an, let's go actually back to the monthly. It's an area where you want to be a little prudent. Here's your high here. This is 1404, and this high here is 1440. So, this is going to be a resistance area, and you can sell some longs into it, because buying this area and initiating new positions that you think you're going to have for a longer term trade, it's definitely tricky. But also, unless you are a professional, unless you can handle some swings, it's also hard to short into that area. So for right now, you don't have to be in tier 2, tier 3 longs across the board. The same way, I think you could just have both working for you. Now, with that said, let's take a quick look at Apple, and I want to show you, the intraday chart so you could see what was going on in our heads, because some guys made money short in the first 30 to 60 minutes, but then, once it held the gap and you saw commitment to the pro move in the first 60 minutes, you had to switch gears. It wasn't just a sell the news event. And if you look here at Apple, where it closed, it actually was an easier trade in the end of the day from like 598 to 601. Closed on the dead highs above the 600 pivot. If you go to just say the 8-minute chart, okay, and you look here, guys, here is the gap up, okay, that everyone wanted to fade. That's fine. You could have faded it and it wound up working a little bit. And then really, this was your inside range that was tradable for a short. And this is actually where I made a little bit of money. I said, you know what, I'm going to short, 594. I think it was like 490. I think I actually waited to here when it broke this bar. About 593. This is where I got short, and at least I had it calculated out. And once it broke this low here, I covered into it because I wasn't looking for much. I wasn't looking for a home run trade. And for those looking at this, from a different angle, and if you stayed short, once you saw, same way we talk about outside days in the overall market, look at it on the 8-minute chart. Here it is, pushed down, came back above, so it got people out of their lungs, trapped some shorts, and you still had a decent portion of this gap unfilled. This was your spot to take some off, to cover some of your shorts if that's what you were looking to do. okay, because this is when this trend changed. Here was your gap up that was sold, giving you a little bit of an indication that maybe it continues. Here's your inside range that resolved to the downside, a spot to potentially add. Okay, and then once you saw this bar close and do an outside day in the first 30 minutes, this was your time to at least book some and then wait to see what happened. And then once it consolidated right here back at that halfway mark, this was your out. This is where you had to be out. And this is where some people said, you know what, I'm going to look at a bigger wedge. Okay, if you look here on the bigger time frame, okay, which was the 90-minute time frame, this is when the long ignited. This is when people who were waiting for this to be digested, who trade on a different time frame, that's when either they had to cover their short, or this is when some people who were looking for an intraday trade that didn't catch this outside reversal said, I'm going to buy it once it clears this inside range, and there you go, $5.95, you bought it, never even tested you all the way back up to the highs, and you could have made a nice $5. And then it consolidated all afternoon long. I traded this three times. I traded it once in here, once here, and then I traded it one more time right here. Okay, right when I figured that they're not going to be able to hold it through 600 this time, and you had a nice little move here. I was in a lot of other things that I thought were more methodical to me, and less crowded throughout the course of the day. One of them on the open, if you remember from we did a quick hits with Netflix. I said Netflix is a descending channel. That was my A+ setup for the morning, to watch. And it was a little tricky at first, but then it triggered through 111. I'm going to give you a little education on my tier system, because people are like, are you long? Are you short? Are you out? Are you in? You know what? And I don't do an all or none. I was long a little Netflix overnight. I liked the way it closed. I figured they were holding it down because of the 110 strike. And to me, I'm like, I'm going to try and add above 111 to 112, because that's when I believe it breaks that trend. Sell some, take some cash flow, considering I held it overnight. I bought some, it was negative to positive. Buy more, sell some, and then hold some. So this way, you're holding some for now from Friday to what could be Tuesday. That's a 3-day trade. And you're also booking some to make yourself feel better so you have a little less risk. So if you look here at Netflix, this is what I'm talking about. So here's the descending channel that we outlined. Okay, this is when it woke up. Okay, you remember it woke up on Thursday. I wasn't really that involved in it, but that gave me a heads up to being on Friday. But I think option expiration is kind of what held this thing back. So I took some home. I took about a tier 1. The high was 111.71. So once it crossed that 111 to 111.71, I added to it. Okay, then above 112.5, I sold some to get back to what I was originally long, and I took some out into the close. So I was able to book some of the trade, okay, intraday, and then hold some for what could be a move to at least this high area of 116, 117. So I'm going to take some overnight. If we open down a little bit, perhaps I'll add through today's high if we get that trade, or if they open up, I'll sell some in front of resistance. And that's how you do some trade management. And it's worth having that plan in order to do so. Guys are also asking about LVS. What are you doing with LVS? What's your target? I said, depends on the time frame. LVS gave you 3-4 nice trades in the last 2 weeks. Then if you remember last week, we talked about 56.20. Said if it crosses 56.20, the macro wedge will be in motion to resolve to the upside. That's when you can get back from a tier 1 to a tier 2 as an investor and as a trader. If you look here at LVS, LVS triggered above. This was that point right here. This was above this 56.20. That was on the price point sheet. We talked about it until I'm blue in the face. Actually, here is a quick trade. Then it held above. You could have added, if you did, which I did not, above this 57.70 or even here 57.89 for what was a move to almost 60 today. So if you were in your tier 1 here and you added to tier 2 and you held, or you added to tier 2 here, you get back to tier 1. So now you've held a tier 1 since this lower level, and you traded through the pattern, and you're looking good for what on the monthly chart could be, a move to, what's this right here? This is that's 59. This low here is 63.57. There's no reason why this thing can't start getting back to where it broke down from right here, and this is why it kind of came up with that 63 to 65. So that's on a bigger time frame. On a daily time frame, you got to pick and choose your battles. So anyway, the same type of scenario goes for Win. You had viable patterns in there, and you also had tradable patterns in there. I still like this Caesar. I think that it's absorbing the secondary news very well. I'm only in a tier 1 because it's not worthy of a tier 2 yet. you have a little bit of a wedge developing right here. I'd love to get the news out of the way so then I could be a buyer of this thing over 13 for what could be a move higher. But still, this igniting bar is intact. Didn't give back more than half of it and only touched it here, and now it could continue. LinkedIn, I don't like the way the action is, but I'm staying with it. At some point, maybe it wakes up a little bit and can get above this zone. I'm only in a tier 1, and I won't get into tier 2 until intraday I see some better action. That's fine. Dunkin' Donuts, I love the way it reacted today. It opened down. Didn't even really give you a chance to get out of it. We have to change this pattern here a little bit. So I held what I had. I landed tier 1. I didn't buy more because I knew I wouldn't be able to handle it. But in my note, I said as long as it holds 30.60 or 30.40 to 30.60, I'm going to stay with it. So right off the bat, it put in a low of 30.69 and then it held sideways. So now I think if it can continue to absorb the news and then they come out with actual the deal and the pricing and all that kind of spiel, I think you can now trade it, reverse this low, and that's your new stop. If you're uncommitted to it, you're not in a long term, that's your stop. But if you're in a long term, I still think it's acting well, and it's just going to take time now to get some momentum back for a move through those highs. So you have to know your time frame. And for me, I know I can only be in small until it starts to show me some more data that it's going to be ready to go again. But it's still long term. I like it as a trade. Unfortunately, these guys in the deal don't know their tush from their elbow. And it'd be nice if these IPOs could just run without these secondaries that they have to do in order to get people out of the way. Same thing happened with Coors. Coors has pulled in a little bit, not a lot, but they're also doing a deal. So once that deal's announced, we'll see where it's at and see, what could be the level to buy it. Some guys were looking at it today, right here. But I think, maybe down here is a little bit better. It's been a great move since the IPO, since it crossed this area. So maybe they want to just take out guys from the deal so this way they're out of the way. But again, that's forces above our control. So we could just watch the price action. For now, not so bad. So as far as like the banks, I sold my Bank of America on Friday. And I was like, you know what, I'm not going to short Friday because I feel like everyone was shorting Friday. I was just happy to sell it. And I wasn't upset with myself that I didn't get the top. And then I figured they were short Friday, all the banks, and they got squeezed today. So I looked at it as a potential cash flow trade. Not saying short the market, tops in. It was just money could rotate to oil, to the ags, to some of the other areas. And this could be a 1 to 3 day short, kind of like Under Armour that we caught last week. So if you go to First Bank of America, you will see the move that it had. Okay, this was the buyable pattern. Okay, we're in tier 1. A lot of us went to tier 2, tier 3, tier 4 when it broke above. And now you have a small red dog reversal. Okay, here's resistance. Okay, so it pushed the envelope a little bit into this. So to sell this zone versus buy it the first time made sense. Now if you take a closer look, what's a red dog reversal? When it trades through the high of 980, puts a high in, and then trades back below it and puts in a short-term sell signal. Doesn't mean game over in Bank of America, but it means look how far it is away from the 10 and 20 day, and this is Bank of America. Maybe it comes into this area, and this will be buyable, right? So we shall see. We'll know along the way. We'll see how it opens up tomorrow, but definitely a nice sell signal. If you're waiting for the sell signal, I actually just sold into strength on Friday. Probably a little early. This could have been when it crossed that high, came back below it. There you go if you were trailing this thing, because it's the first time it closed below a prior high. Did it do it here? No. Did it do it there? No. Did it do it on this day? No. First day, traded above, came below, short-term sell signal, and then we got to figure it out. JP Morgan didn't really do that quite yet because, again, it wasn't as extended, but it's hanging up here. So Wells Fargo, also hanging up there, not really giving you signs that but it's not as overbought. Goldman Sachs, I tried through this 125, but once it came back below, I got out because I really wanted to be short some of those indices. So now, if you look at the FAS, actually, you look at where it closed. It's thinking about like Oops, hold on. We did catch a cute little trade here, but by no means is this saying it's fully done. I just lost my toolbar, but anyway, I am short some versus the highs. I got in about I got right around here. Just so you can see how calculated it was. All right, here is where a lot of people started probably with short early. This is where they got squeezed. Once I saw this flag have this potent day or this potent bar here, that put it on my radar to get a little short. So right here is when it started to roll down, and this is when I got short. I'm like, I'll short 112.20, and if I had time to actually tweet about it and say I'm short 112.20 versus the highs of the day, that 79-cent stop, risk reward in my favor after a huge move, and then you had a nice move lower. I definitely took some off, but I'm taking some overnight because I think perhaps you could see a little bit more downside down to here. Not looking for a blockbuster trade, but why not? Why not a little bit further, considering on the daily chart where it came to. So it could test. This high here is, that's actually a lot lower. But we'll see. I'm looking for like 108. That's where I would like to cover some, see if perhaps you can get some into here. So I'd rather be buying a dip than being short. But again, for cash flow, you could do a little bit of everything. As far as the USO, still looks good. You got long on Friday, still on the move. OH is still look okay also. Holding above this little downtrend break. I bought it while it was negative, still in the game. And I got to wrap it up. But the bottom line is, today there were a lot of things going on, both from the long side, both from the short side. You could have picked your spots depending where you were. If you remember, we talked FCX, that it was getting close to being ready. If you take a quick look here, that sometimes you can't mistake. I know this looks like a bear flag. Remember, here was the pole, here's the flag. But if the market continues to rotate, they come after a lot of things. And this FCX tried to go, not that much power today, but we shall see. It looks okay. X was much better. Look at this move in X. Wow. People who just thought it was over down here got crushed. That's why you have to really watch during a bullish tape. You can't mistake a rest for a shortable stock. That's why, again, I don't want to get overly excited and press the shorts or the bearish side of the banks. I'm not pressing it. I'm just trying to catch a short to also mute some of my longs, just to have something going in the other way. But money continues to rotate. There continues to be action across the board. Guys are asking me about dries. Dries also, if you think about it, a nothing trade could have made you some nice money by buying it on this day. We added around 320. A little bit of a reversal tail, so I'm only in a little bit left, but that was also just something to do. So as long as you're looking for something to do with an open mind, you could find it, but make sure you approach it with a plan. I'll see you tomorrow morning with Brittany Umar. She'll be hosting the morning call with me. Have a great night, and tomorrow's another day.